Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about how I turned $4,300 into over $16,000 in less than a single year. So if you want more investing and stock videos like this one, remember to go and subscribe to the channel, smash the like button right now, comment your thoughts down below. Without further ado, let's get right into it. So about a year ago when I made this video right here that you see on screen, I started out with around $4,300 in a Robinhood portfolio, and I had a couple goals. So goal number one, we couldn't use any margin. Goal number two, we weren't allowed to do options such as put stocks or call options. And lastly, we had to carry proper risk management, and I'll talk about proper risk management throughout this video. I started off with a dividend growth strategy. So on average, my portfolio gives me a dividend yield of around anywhere between 2 to 4% depending on how I'm trading and what stocks that I am buying currently. Currently, I have a buying power of around $1,300 right now, and this is because I know that the stock market is trending downward right now because I am invested into many innovation and growth stocks, and I have lost around $1,100 over the past week. However, overall, it looks pretty solid of 85% growth overall. And remember, this is a newer portfolio. We also hit some highs of almost 20,000, which is what I really wanted to hit. I wanted to hit 20,000 for this video, but I didn't want to put this video off any longer, and I'll just deal with the current downtrend of the market of $16,000 right now. So we're going to go over some stocks that I currently have in my portfolio so I can be as transparent as possible with you all, what my strategy is, and how I do proper risk management. So we're going to start off, clearly you can see some stocks on the right side of my screen, and these are relatively older stocks, but you'll see that I don't own a lot of any one company. I don't even have an entire share of GM or Uber. However, when it comes to more dividend stocks like Coca-Cola, I have 2 shares, or Bank of America, I have 2 shares. So these are the stocks that I currently have purchased, but there are so many of them, there's no way we will be able to go through all of them. But as you can see, I only own about 1 share or maybe over 1 share specifically for some dividend stocks such as Coca-Cola and Bank of America. So why is that? Well, halfway through this strategy of dividends, I figured that, you know what, this is going to be a hybrid dividend growth strategy, and then I had this fantastic idea, and I even did a poll on YouTube of creating my own S&P 500 ETF that I'm going to do in my own portfolio. So basically, I have over 500 companies in this portfolio, and I have weighted them all to my specific requirements of buying only around 1 share. Now, many people are like, well, that's not really going to do much. That's not going to be a good growth strategy. However, it's worked out pretty handsomely because over the past year, I have gotten around $7,771 from this, almost doubling from the original $4,300, along with some money that I have personally put in myself. And if we even look at the all-time highs, we can see that I was over $10,000 worth of profits if I wanted to liquidate my portfolio at that time. However, I didn't. I'm going to leave this for the long run. So why am I doing this? Why is this strategy working? And what are my plans for this particular portfolio in the future? Well, right now, I have a drip investing enabled, which means that any dividends that I get from any stock, they're automatically being reinvested. So you can see some dividends over here, and from these dividends, these are going instantly back into the stock, which is why you can see certain stocks don't just have 1 share, they actually have 1.03 shares or 1.01 shares, or even more than that of 2.10 shares, such as Coca-Cola's case. So again, this is a hybrid dividend growth strategy, and it's also extremely diversified, which is going to give me a lot of safety for these various investments. I also want to show you all my allocations between stocks and ETFs, and how diversified I am through various industries and sectors. I also have around 12% of my portfolio in very high-performing ETFs, and the other 88% of the portfolio is stocks. The reason I have so many singular stocks and not more ETF exposure is because these stocks act as one giant ETF due to how diversified I am, which again cushions me from any downtrends like we are experiencing now. However, in the uptrends, the stocks still perform very well because I am very heavy in tech and finance. Also, financial stocks are set to do fantastic as the Federal Reserve increases interest rates because their loans for flexible loans are also going to increase in interest rates, thus giving the banks more revenues and money. You could always look into various finance stocks right now before the interest rates actually increase in March. So I have about 26% in finance, 18% in tech, media, and telecom, 16% in consumer goods, 15% in manufacturing and materials, 9% in healthcare. We have energy, water, business, hospitality, and a few others here. So here's just a quick snapshot of my portfolio. Also, if if you want a free stock with Robinhood, I have a link down below where you can download Robinhood and we both get some free stocks from it. So don't forget to check that out. But first, I want to talk about risk management. And to do that, I actually want to go to my PLTR stock, which is not doing well in this particular portfolio, but it is doing well in my other portfolio. So Palantir is up around 1.67% right now. However, I am at a pretty decent loss of 35%. Now, despite this loss, I think Palantir is a good long-term company to buy, and I don't expect really to get any gains from this company until much later, such as over the next 2 to 5 years. Right now, I'm just mainly focused on averaging down my average cost, which currently sits at $23, which is really not good. We would want this at least below $17 to $20 at minimum, so we are already really high right now. So even though I have around 23.5 shares, my portfolio diversity is 1.15%, so it only makes up a minuscule amount of my overall portfolio, and this is due to proper risk management. Now, I personally can easily continuously add to my position until this portfolio diversity hits 3 to 5% of my portfolio. The reason why it's currently not at 3% or 5% of my portfolio is because I am purposefully leaving room, so as the stock continues to fall, I am adding more to the stock on every bottom. So I would buy here, and then I would buy at this bottom, and then I'm about to buy again at this bottom. And this is going to lower my average price and my average cost for the stock. However, many people do risk management improperly because they are already too overexposed to Palantir stock. So for instance, if somebody bought Palantir, let's say at one of these highs, either here, here, or here, that would be a very bad move on their part, because let's say that I was really bullish on Palantir and I rushed in and I put $28 per share for Palantir and I bought 23 shares or 25 shares or even 1,000 shares. I am now overexposed to this stock, and it hasn't left me room to average down as the price is falling. And as you can see, the price has definitely been falling pretty drastically over the last 3 months or even over the last year. So by slowly buying into speculative stocks such as Palantir, or at least long-term holding stocks such as Palantir, I get to lower my average cost without overexposing myself to a single company, which is proper risk management. So I will never let this portfolio diversity exceed 3 to 5% of my portfolio, depending on the particular stock. Now, for Palantir individually, I will not let Palantir exceed 3% of my portfolio, but I almost have a 2% left of my portfolio to continue average down on this stock. But once it hits 3%, I will no longer invest into Palantir Technologies. Now let's take another stock such as Block, who used to be called Square, and we'll see my strategy for that. So Block is the exact opposite. Currently, Block trades at around $131, and my average cost is $48. So I am up around 173% on this stock, with a total gain of around $83. Now I only have one share, and this doesn't even make up a percentage of my portfolio. The reason why I am doing it this way is this is the exact opposite scenario where I get to increase my portfolio diversity by adding and gaining and increasing my average cost, because I think this company is going to be fantastic over the long term. If we look at the chart, we can see that I bought around here. So I bought the dip at around here. However, I knew that the stock price was way too high here, and even on this dip, I did not buy a single share. And when the stock was priced all the way at $275, I had a fantastic gain because my average cost was only $48. However, I knew that this price consolidation was eventually going to lead to a pullback, and look what has happened over the last year. That pullback has come into fruition, and now I get to safely increase my average cost because I didn't overexpose myself to the stock initially. Imagine if I overexposed myself to Block stock at around $275 per share. That would be a terrible deal because the stock price has been slashed more than in half, because it currently trades at $131 right now. So this way, I'm doing the exact opposite of what I'm doing with Palantir, and I get to actually increase my average cost without overexposing myself to a single stock, so I am extremely diversified. Now, some people think that over-diversification can hurt your overall gains, and this is true only if you diversify or over-diversify incorrectly, and let me tell you what I mean by that. So I have over 500 stocks in my portfolio, and I have experienced fantastic gains even during this market downtrend. So even though my portfolio went from a gain of 115% all the way down to a gain of 85%, it's still solid gains, and my portfolio is outperforming the S&P 500 by almost 4 times. And the reason for this is I'm only investing into good companies, and if they're a speculative company, I won't even buy a share of the company. For instance, Uber, I don't even have an entire share of Uber, I have 0.79% of a share. However, I would not recommend this strategy for anyone else because you have to constantly be able to reevaluate and trade various stocks in a portfolio like this so you can get fantastic gains. And we can just see just some of the gains that I've experienced from some of these stocks over the past year. Bank of America, I'm up over 130%. Then we have Snapchat, I'm up over 140%. So again, this strategy is working for me very nicely, and it's also saving me from market downtrends. I'm also getting fantastic dividends that we touched on earlier from these various companies because I own so many of them, and I'm also reinvesting into these dividends with literally no risk to me at all. And again, this is only one of 4 or 5 portfolios that I have, and this one is actually the one that has the least amount of money into it. This is more of my YouTube play around money that I am using to do this specific strategy. Each one of my portfolios uses a different strategy. For instance, my Robinhood portfolio is my over 500 ETF portfolio that's supposed to outperform the S&P 500, and right now it is doing that very successfully. My Webull portfolio, on the other hand, is more focused on growth and innovation stocks, and specifically electric vehicle stocks. In 2 of my retirement accounts, I have very safe stocks where I'm only investing into ETFs. I really don't have any single stocks besides 1 or 2 in any of my retirement accounts. And lastly, I have a cryptocurrency portfolio, which I am mixed with Bitcoin and Ethereum as well as a few other ones, and I am anticipating to make videos on those if this video performs well. So I want to hear what you all think. Comment your thoughts down below. Remember to smash the like button right now, subscribe if you are new, and I will see you in the next YT video.